Hello everyone, and welcome to the VP monthly conference call. This is our first attempt, and we are going to do this on MPS. Uh, Ayush is going to present on management quality, and Rohit Balakrishnan is going to present on business quality, and this will be followed up with a Q&A session where everyone is encouraged to ask all kinds of questions that may come up in your mind. Most of you are familiar with the business, and there are these structured business quality presentations and management quality presentations. There is also the management Q&A which is captured and available to you. So use that as the background, and let's go deeper. And this is the right time to acknowledge Rohit Balakrishnan. I'm mighty impressed with Rohit's work at ValuePickr over the last 6 to 8 months. Rohit has been contributing regularly at ValuePickr. I first noticed his work in Ambika cotton thread, very detailed, very quick, incisive domain work that he used to put up. Related, I also remember Premco Global, where he has put up significant contribution, which makes you notice his work, the passion that he brings to his work. As also, I think Nitin Spinner's thread is another. So all it goes to show that there are new people at ValuePickr who are taking up this VP ethos of sharing freely without any expectations. And in the process of sharing freely, we all start getting better at our own job. Many times we think that what do we gain by giving up sharing freely what we share on the forum for everybody's benefit. The biggest benefit is growth for ourselves, because then what happens is your work gets noticed, and people smarter than us get around us and encourage us and help us to refine our own thinking, because they value the work that we are doing, the passion that we are bringing. That is what is more endearing, and Rohit is a shining example of that. I'm very happy to welcome Rohit to ValuePickr top 20 contributors. So he is the 21st top contributor at ValuePickr, and he has done an excellent job on compiling work for MPS as well. And I invite him to. I hand over now to Sandeep, our moderator. We need a good moderator for this session, because when the speakers speak, they should be able to speak uninterrupted. And once these speaker sessions are over, then also the questioning, probably the moderator will play a very big role in controlling and ensuring a very smooth discussion flow. Thank you, Rohit. Welcome, and hand over to Sandeep.
Great. Welcome everyone, and welcome Rohit. This is our first session, so let's iron out, if there is any kind of quirks in the flow. What I would suggest is, Rohit, please present it for the benefit of the rest of the group. Please reference the page number on the slides as you move through the slides. We will keep all the question and answers for later on in the session. If anybody has any questions, they can message it and be in the queue for the question after the question answer session has been after the presentation has been completed, both by Rohit and Ayush. So Rohit, welcome, and please start with your presentation.
Sure, Sandeep. Thanks a lot, Donald and Sandeep, for making me part of the group, and thanks a lot for the opportunity. So I'll start with with the business quality insights on MPS. So as most of you are aware about the business of MPS, I'll quickly start with some of the key points about the industry landscape and about MPS. So if you look at MPS, so the industry which it operates, it's a big market. It's a $1.5 billion market in publishing services market, which is growing at about 15% year on year, and is expected to grow further because technology is getting important for publishers, because the way content is being consumed. The market has some serious players. There are not many serious players in the academic and journal segment of STM, which is science, technology, and medical journals and book space. So there are 5 to 6 players who have scaled up. So there is SPI Global, which is 1,000+ crore in terms of revenue. There is Aptara, data 400 to 500 crores in revenue. Then there is SPS Global, which is about 200 crores only in the academic journal segment. But that's the player with the best EBITDA margins. So if you look at all the players, there is variance in EBITDA margins, and SPS is the best player. So SPS was actually started as a back office of Springer, which is a journal publisher, and that was headed by an ex Macmillan India top level executive. And even now, SPS Global gets about 50% of the work from Springer. So, so these are some of the scaled up players, but there are many other smaller players who have not scaled up or who have not been able to keep up pace with the technology. So there are many players. So if you look at serious players for publishers, so these are the players who they would sort of rely on. So the publishers are also not awash with choices in that sense. So there are only 5, 6 players who they would want to rely on, and the publishers are also consolidating their vendors. So in a sense, the bargaining power is sort of matched with publishers only relying with these people, these 5, 6 people. The other thing which the industry has is the stickiness is extremely high with the players, because a new vendor will not get entertained if you do not have an existing solution, and the entrenchment with the publishers is extremely high. So for a publisher to change vendors, it's very difficult. So that's why it's interesting to note that perhaps why IT players, seasoned IT players, are not there in this industry so far. They won't be able to. It seems difficult that they will get any piece of the action, as the customers are very reluctant, as I mentioned, to sort of partner with them because they don't have any prior experience. So, so that's the broad landscape. Now, MPS has some interesting things going for it in terms of intangible. So, the brand itself of Macmillan, so they were sort of the father of this industry. Macmillan Publishing Services was the back office of Macmillan Publishing arm, and they started this industry, and they have immense amount of intellectual property, domain skills, and very qualified people who literally started this industry. That is also reflected in the way in the customers that they have. So all the big publishers are already their customers. They have been very methodical in executing their scale up. So in the last 3 years, there was a change in the management, and the way they've been executing, and they've turned the operations around of MPS has been spectacular. So management is a very key component in the entire piece. They've been investing in technology and platforms, which has enabled them to become stronger over the last couple of years. They have expanded their service suite by acquiring three companies. And again, the interesting point here is that the way to scale up because of the stickiness is perhaps to look for more acquisitions, and MPS has been able to do that. And the way they've done it is very efficient by looking at the problem areas for their customers in their existing vendor landscape. These vendors may not have the financial muscles, or they may not be able to scale up technology on the technology side. So MPS has been nudged by the customers in some occasions to look at them, and because of the confidence of the customer in MPS, they've referred these players. So that also is a very interesting point. They have a very strong balance sheet, which will further enable them to look at acquisitions in a consolidating vendor landscape where there are many small players who would sort of not be able to scale up. So if we now take a step back and look at the what are the how does this shape up for MPS in terms of can this business have a disproportionate future? So there are, as I mentioned, there are three broad trends that are happening. So one is the market size itself is expected to go up because the overall importance of technology is expected to be realized by publishers because the way consumption of content is happening. On the other hand, there is consolidation of vendors. So there is a core vendors that are happening. So MPS has already increased its business with one of its key customers, Reed Elsevier's book segment, by 100%. It's in their annual report as well. With Macmillan as well, they have increased their business 40%. Both these are year on year. So they are moving up in terms of becoming core vendors. And they're investing in technology and products which will further enable them to capitalize on two things. One, it will help them to thwart the pricing pressure that they face and help the productivity gains and margins. The other is they will be able to open a new market of smaller publishers because this could really become a huge thing going forward. So again, so it has all the ingredients to become have all the building blocks are there for the business to have a very good future, if you will, in the next 5 to 10 years. So, but what are the things that can possibly go wrong from here? So a few things come to the mind. So one is poor acquisitions. So so far the other is the scale up can take some time. Technology disruption could happen. The wage cost could spiral because it's a services business. So again, that's a very key component, and the business already very high customer concentration. But if you come to think of it, customer concentration is if the management feel that it's actually a strategic asset because you're so deeply entrenched with your customers. Your customers have immense confidence in you, and if you are a core vendor, then you would continue to get more business. So that is what so customer concentration in that sense is not really a risk. But if you look at other risks. They're not they may be minor risks or they may be risks that are that can be managed because the management which is at the helm has proven in the past that they can solve these issues. For example, technology, they've been investing a lot on technology. They've been investing in the last 2 years on platforms. So perhaps not a very big threat for them because they are trying to match the technology curve. So the key monitorable or the key risk is the execution risk, which one has to monitor, and one has to see if the management can really walk the talk on what they've been communicating and what they've been saying in their annual report, in their conference calls. So that's key risk here if one has to think about. So we've talked about the industry landscape. We've talked about the intangibles that the business has. Now let's see how does it play out in numbers. So the numbers.
Sorry, Rohit. Now you're on slide 3.
Yeah, slide 3.
Okay. Take on.
So if we look at the numbers, so they speak for themselves. Last 3-year return on capital is 54%, and this is the average for last 3 years. If you look at last year, the return on capital is even higher. So it just shows the quality of the business. Even so, if the best metric to see a business, or as per Warren Buffett, is the best businesses where you can deploy a large amount of capital at a very high rate of return for a very long period of time. So for MPS, that seems to be the case if we look at it. Their EPA to sales ratio is 13%, which is extremely good. Usually, 5 to 7% is considered a very good benchmark, but 13% is phenomenal. And even if you look at earnings, indicate the quality of the earnings, there is very strong relationship with cash flows and earnings. They pay a very strong dividend, greater than 60% of dividend payout. So the numbers also tell the story. Now, if we look at can this business continue this good run that it has over the future? It seems that because the industry size is growing, the penetration of publishing outsourcing spends for publishing industry are pretty low at this point of time, and the industry itself is growing, and there is enough legroom for many players. At the same time, the competitive intensity is not very high. While the overall industry, as I mentioned, is fragmented, but because of vendor consolidation and because of the ability or the inability of the smaller players to not scale up, there are only 5-6 players. So while the margin pressures are there, but it gets sort of evened out because there are only these 6-7 players who the publishers can really rely on. So it's not really a competitive industry in that sense. And because of stickiness, a new guy is extremely unlikely to enter. So we have an expanding market. We have a very tight industry group of 6-7 people who are serious in this business, and we have a management which has executed very well so far. There, as I briefly touched upon earlier when I was talking about acquisitions. So they have a very they've successfully acquired three companies. Out of that, two were through customer blessings, which was basically customers referring them that why don't you look at this opportunity because the existing vendor is not doing well, or they were facing some issues with that existing vendor. Just shows the confidence that the customers have with MPS. So again, that's another thumbs up to the management. The way they've been able to not only get the business on track, but also not only restore but increase the confidence of customers for MPS. The predictability of the business is very strong. If one has to track this business, there are broadly two things one has to look at. One is the growth rate of revenue from the top 5-10 clients. So, and why that is important is because the 3/4 of the business comes from the top 10 clients, and going forward, because of consolidating vendor base and MPS wanting to be a core vendor, this is a very key metric to look at. The second is again important to profitability is how do they control their wage bill. So the management has indicated that they want to keep the wage cost at 40 to 45% of the revenue. So that's their focus. So these are the two things that one has to really look at. And again, coming back to sort of why this business is sustainable, or can somebody dislodge MPS from its position? So because of the stickiness of their customers, a new entry in this industry group is extremely difficult. So it essentially is these 5-6 players, and whoever is ahead of the curve in the technology should do well. And MPS has been investing in technology over the last 2-3 years. So it's just about execution, and it's about MPS's engagement with customers and how they can increase volumes with them. So does this business then have what we call the building blocks for a disproportionate future? So in the next 2-3 years, it looks very promising because of 2-3 things. One, what the acquisitions that they've done, they're fully integrated. They have a more complete technology suite, technology portfolio, so they can offer a broader set of services for their customers. They have a very robust backend suite of pre-publishing platforms, and they're also investing on the front end side. So they have one customer on that side. So on the over the next couple of years, the future looks very promising, and if they execute that, then over the next 3-5 years, it will again be very promising. Uh, then if we look at the near term visibility in terms of growth, uh, I mean, we 10 to 15% growth visibility looks achievable, but even higher organic growth is possible, could be possible, because the acquisitions that they've done, they will also start to fire in. They have become core vendors over for a few publishers, and with the trend of large publishers focusing on vendor rationalization. So all these can definitely help in providing greater than 15% of organic growth. And then management is also on record saying that they will double their revenues over the next 3 years. So that's obviously including acquisitions. So overall, looks that the near-term visibility is pretty strong. And the good thing also is that for their acquisition, they have a very strong balance sheet. They've raised cash at the right time. And if you look at the management's confidence, I mean, if you look at dividend payout also, in spite of them broadly indicating 20-25% growth over the next 3 years by doubling their revenue, they're still paying out dividend. Dividend payout is 60%. So near-term visibility looks very strong. Again, over a longer horizon, 5 to 10 years, if the business scales up, the position of MPS will become even stronger. They have consciously invested on the backend and on the backend platforms. They are investing in products. They have strengthened their service suite, and with technology and outsourcing spends increasing, the market will only grow for MPS. So it could become a very strong player in its domain if it scales, if the next 2-3 years, if it executes well. So if we look at the overall, so if you just have to sort of summarize and look at the overall business now. So we have a business. What are the key things that we look at in a very strong business? It should have a strong runway for growth, which it has. The business should be very predictable, which MPS looks to be, because there are not many moving variables here. You have to just get customers and keep executing and just provide services there. What is the competitive advantage, or what is the sustainability of that business? Again, there MPS, because of the customer stickiness and not many players in the industry, only 5-6 serious players. It seems that MPS will is on a very strong wicket, because there are not many serious players who would try and dislodge MPS, and a new player entering the market is extremely a remote possibility. So over the next 2 to 3 years, if the business executes on its strategy of becoming a core vendor, increasing the spends of its existing clients, increasing its wallet share, then I think over the next 5-10 years, MPS would become an extremely strong player in this domain. So the next 2-3 years are in that sense critical, and given the management that is there on board, they've so far done very well with the business. They've executed very well. The next, so it seems that they should be able to execute, but that's the key monitorable. So we have a business which has a strong runway for growth. The competition is not very high. The serious competition is not very high, and it's very difficult for a new guy to enter and dislodge an existing player. So, that the business is very attractive in that sense, and if they execute, it'll continue to become even stronger over the next 3-5 years or even 10 years. So that is pretty much it from my side on the BQ presentation.
Great, super, Rohit. I see that there are already some questions flowing in, but we'll keep them for a bit later on after Ayush has finished his presentation on the management quality slides. So I would now welcome Ayush to start with his presentation, and then we'll have both of you ready for answering the questions from the group. Ayush, if you want to please start.
Okay, so I'm going to discuss about my observations about the management quality at Mps Limited. What I feel is that MPS, the biggest point in MPS is the management quality. Mr. Nishit and his team, the kind of work, the kind of turnaround they have done over the last 4-5 years since the acquisition of the company is a case study in itself and a very remarkable thing done in a short span of 4-5 years. To just go back and understand about the problems a bit, when they had acquired the company in 2011, I think the company was totally disoriented as the parent Macmillan was not focused on this business and they had really high cost structures. Plus, at the same time, they had been left behind in the competitive positioning. There were lots of new players who had moved forward and were ahead of the game. So just think from the management perspective. When they acquired the company was making a lot of losses of around 7, 8 to 10 crore per quarter. That was the kind of problem when they had acquired the company. And after acquiring the company, based on what we had understood from the industry people, the company had immense pressures as a new management had come into play. So everyone knew that he's the guy who could have been squeezed, who could have been pressurized. There are lots of old contracts which could have gone away. Customer relationships which were there due to Macmillan could have went off. But what we see today has been a fantastic performance from loss making to a 35% EBITDA in a 4-5 year span is something remarkable. Something what I have personally not seen happening. And all the marks goes to the management on this. They have been able to retain customers, develop the relationships better, mind the customers better. If we see the contribution from top 5 or 10 customers, it has only grown over the period. We can see that the business from Elsevier has grown 100% last year, and Elsevier is a very major player who is doing a lot of outsourcing. So getting that business and growing on that is something speaks about the quality of the management, their focus, and that they are on the top of their job on the business front. These things could have been done only if they have been really focused and they are right on the business processes, delivery, customer satisfaction. They have also been able to grow the Macmillan business by 40% last year, and these things seem pretty interesting. Other thing that I see which tells about the quality of the management to be on the top of their job is at several points they had the risk of losing the core vendor status. This industry is going through a lot of consolidation where the publishers are trying to reduce the number of vendors they have. They want to deal with fewer players who can.
Hello.
Lost Ayush's voice.
Hello.
Hello.
Yeah.
They're trying to connect again. So
I got disconnected.
Yeah. Continue.
go on, Ayush.
Okay. So I was speaking about the missing gaps in the portfolio. So at several points, they had the risk of losing the core vendor status. because given that the earlier management was not investing business into the business and was not nimble enough, so Macmillan was lagging behind in the competitive space, and they were having some of the services which were missing from the portfolio. They have done a very good job of acquiring companies and filling those gaps in a very cost-effective manner. The acquisitions which they have done are not very expensive, just 5-7 odd crore they have spent on each of the companies, and they have got the missing pieces. Uh, Third thing that they have done very well and which I find remarkable is practicing good corporate governance right from the start. I think it was really remarkable to see within the first year of acquisition, they paid out, I think, 3 or 4 rupees as dividend. They had acquired the company at for 36 rupees per share, and within the year they had paid out 4 rupees as dividend. Since start, they have been adopting the best of the investor practices. They have been holding con calls, presentations, uh, uh, giving all their due disclosures, doing all the best of the things, and that is something what I find very remarkable as a company. Another thing which I find interesting is the growth funding they did at the right time. The recent QIP which was done, I think it was very timely. It has given them a war chest kind of thing. Um, Having access to funds in an industry where lots of small players are up for sale will help them in getting better negotiations and maybe get a fantastic deal like they have done in last 3-4 years. So if we see the 4-5 points, all these things point towards their focus, their grip on the business. They are totally focused and they want to grow it in a consistent manner. The the second point that we can see to judge a management quality is what is the special DNA, what is the specialty of a company. The key DNA that I see in MPS is the profitability, focus on profitability. Right from start, they have focused on the areas which are not needed, which were high cost, like the foreign locations. They had lots of offices in foreign locations like UK, I think US also. They closed those things down. They fired the management layer, which was very high cost, but might not have been contributing meaningfully. They closed down offices at metros and shifted all of it to Dehradun, which has been a very low cost and beneficial thing for them. So uh, it has been a huge focus on profitable growth for them, which is something very valuable, I think, and a key DNA thing that I see in this company. Uh, this is an industry where things keep changing very frequently, and the management believes that uh, you have to be quick to respond to the changes. You have to see where the cheese is moving and adjust yourself. So recently, last year, what I noticed, what we all can notice is that the Mr. Nishit stepped down from the role of CEO, gave it to his son, who has been involved in the business, who is closer to the customer in US, and himself allocated more towards the strategic part, as the acquisition is going to play a greater role in the growth going forward. That is something what I find very interesting. Not many managements would be doing something similar. The next point that we can see to judge a management quality is the capital efficiency. What kind of a business is being the balance sheet and all those things. So definitely the balance sheet has been really lean out here. The ROCs are very impressive. They are above 50-70%. The business is such that it doesn't need investment, hardly 4-5 crores of investment per year into the hardware or those things. And and even on the working capital, there has been a consistent improvement. The debtors have been under control. You see their presentations, con calls. They have a lot of focus on controlling the debtors. It's a key monitorable for them. It has improved from 80 days to 60 days now. Uh, Coming to the capital efficiency part, I think there would be very few companies which understand the capital efficiency part. That is, pay out the cash if you don't need it. This company has been practicing it from day one. They are very clear that we don't need so much of cash flow. The company is blessed to have huge amount of cash flows if you see compare it with profits. And the second good part that they have done is that they distribute the excess cash flow. Otherwise, the ROCs will come down. So they want to maintain a very super efficient balance sheet. Uh, uh, that is something what I find very interesting over here. Uh, the other key thing is the acquisition. To grow in this business, they have been needing to do acquisitions. The good part is that they haven't spent much on the acquisition yet. They have been able to fill in the missing pieces. I was doing some calculations today. They had invested about 17, 18 odd crore in the two acquisitions of Element and EPS done over last 2 years. And within a year, they generated almost 20 odd crore and 2.5, 3 crore net profit from them. From loss-making companies, they were turned around and brought to 25-30% EBITDA levels, what the Indian companies enjoy within a period of 1 year. I think which speaks about their focus and efficiency. At the same time, as acquisition is going to be a key thing going forward, and that may be a major contributor. I think the negative part is that the acquisitions in past were very, very small, hardly 1.5 $2 million acquisitions, and they were not complex. They were very simple in the terms that those companies had good teams, good people doing the right kind of thing, but they were in high cost locations in US, and they had an easy job of shifting most of the work to Indian operations and managing it from their US team. So they have been able to turn around. I don't know how successful they will be when they do a bigger acquisition, or how complex it will be, how smooth will the integration will be, how long will it take. Those are the questions which will remain in mind. But at the same time, when we hear the management talk in the con call, it's good to see that they understand the risks. They are in no hurry to pull the trigger. They want to take their own sweet time. They have built the cash at a very opportunate time. So, given also, if you see that Mr. Nishit, if we go into his past, before MPS, he has had several companies. He has been sort of a serial entrepreneur. He has done good exits and entries 2 3 times. So I think he understands this space of acquisitions, acquiring companies, all those things much better than other entrepreneurs. Uh, then the other parameter that we judge on management quality is the growth mindset. So the pointers based on which we feel that this management is prepared has a growth mindset is first the acquisitions. They have been filling the missing places. Second thing that we have observed in the con calls and interactions is that they understand the game very well. They know that the publishers are at a stage where they are not growing. They have talked about this, that if you're suppose you're the CFO of a company, of a publisher, and your job is to you're not having great profits and your profitability is under pressure, and you have to increase your profitability. The only way to increase your profitability is to outsource, but as you don't have increasing budget, so you have to keep doing more work in the same pie. So it's but obvious that the CFO wants better pricing. And this is what MPS understands well. From day one, they have been talking about it in con calls, that the growth that you see is not high, but the volume growth at their end has been higher because they have been giving the price cuts in exchange of better volumes. So I find this something very interesting. If a company is able to provide more value to the customer, it's obvious that the customer will like them as their vendor and keep giving more work. So they do have the growth set in mind. Uh, Last year they had opened the office in US through which they are doing the acquisition, and it was good to see that two of the family members have been stationed in the US. Rahul and his daughter Joy, both seem to be well qualified and are placed in US to be closer to the customer. and to provide better value to everyone. We can see clearly they are trying to focus on deeper client mining, cross-selling, doing more things. So all those are the positives which point towards growth mindset. On the negative, what we see is that despite all the efforts, the growth rate in dollar terms might have been in single digits, might be just 8, 9, 10%. Though in rupee terms, it's much better. But given such a fantastic track record, I would like to give them more time because uh, customer engagement, relationship, scaling up takes quite a bit of time. Mr. Nishit had given an example where he explained that how a company had given contract to lots of vendors last year. It was a $40 million outsourcing opportunity, but after 1 year, a player could get only $1 million revenue. So this business takes time to scale up. The marriage of the platforms is not very easy. It will take time. The next thing that we see to judge a management is the self-confidence. So obviously, I think the company, the way the management has played things is they have been very confident in themselves. Uh, they aim to be among the top three players within 2 3 years. They benchmark themselves against the best player, that is SPS or NewGen. SPS is a bigger company doing around 200 crore of academic outsourcing work, and MPS is at 120 crore. They take them as a benchmark and want to bridge this gap with the same kind of profitability. So that is the good part. Uh, and hence want to double their size in 3 4 years. Uh, there was an interesting discussion I remember 2 years back during a con call when the company was giving liberal dividends. Then people used to think that as he has acquired the company, so he may be the promoter might be in need of funds, and that is why he's giving a dividend. And people used to question this policy. That what if you need the money for growth? How will you bring it if you are paying out everything? At that time, also he used to be very clear that MPS, what the work we are doing today is really really valuable. If we need to raise money, if something really attractive comes, I'm pretty confident. Mr. Nishit used to say that I'm pretty confident that we'll be able to raise money, we'll be able to partner with PE funds or some investor. The promoters have had a very good holding at 75%, and we will utilize it in a favor if needed. Otherwise, we are confident to make use of our liberal cash flows and use it judicially as and when needed. Uh, the distinctive capabilities that we see in the business is it's a business what Rohit has talked about. What from outside it may seem very dull, but if we think about the whole space, the publishers are under immense pressure to bring down their cost and to become profitable. They are Many of the companies are under a lot of stress. It's but obvious that they will continue to outsource more as India is a lower cost destination and can bring the same quality of services, can do the job better at a lower cost. So the distinctive capability about this business under management is the clients are much bigger. They are $1 billion companies. Maintaining good relationships is a very key thing which MPS is doing successfully. The opportunity is that MPS is still at just 7%, 10% market share of the outsourcing spends of such companies. So that is what I feel the company is doing things in the right direction. Core vendor is a very important thing to be in this industry as there's a lot of vendor rationalization going on. Companies are trying to reduce the number of vendors. So efficient player of like MPS should continue to do well. Other thing that we have to see in a mid cap and small cap company is how institutionalized the company is to be able to grow, even if the main promoter is not fully involved. So, and MPS is an example where I feel, even perhaps due to the legacy of Macmillan earlier, that it's a highly institutionalized company and highly professional in nature. The different business segments have different business leaders, heads. If we read the Glassdoor reviews or take industry feedbacks, employees are very satisfied with the company. They love the culture. Uh, the freedom they get, the learning environment they get. So I think all this augurs very well for the growth of the company going forward. That is from my side on the management quality.
Anybody having questions for Rohit can start asking him. Rohit, are you there?
Yeah, I'm here.
Rohit and Ayush and me, all of us will support in answering the questions.
Okay.
Hi, this is Kiran. This is probably very, very basic. I think this is an excellent overview of the business. I just have one very, very basic question. So, and I always had this doubt about MPS. Okay, so as of 2013, the revenues are about 160 crore. Right now, they're about 200 crores, so 25% growth overall. Okay, and that's what I see in screener. Your currency depreciation is also depreciated from 53 to 65 or 66 or whatever it is, right? So 20%, around 20%. So net, what you're looking at is your entire sales growth, because primarily MPS gets primarily dollar revenue. Net over the last 2-3 years, your revenue growth is because of dollar depreciation rather than volume growth, at least from a very basic perspective. So what gives us the confidence that we'll actually get dollar volume growth here rather than just currency depreciation? Of course, if rupee goes to 70 rupees, that MPS will get that much more revenue. So that was my question and probably my thesis of why I have not invested in MPS, because I see core sales growth. So if anybody could answer that, that'd be great.
I can take it up.
Yeah.
Yeah. Like I highlighted in one of my discussion is that see, first thing is we'll have to believe what the management is saying given their track record, and they have always highlighted this thing that when they acquired the company, they had been under tremendous pressure on the pricing. The industry is so competitive that it's not that the rupee has fallen and everyone has benefited just because of the fall. Everyone has to give the price benefits whenever the rupee fall happens. So, as per the management commentary, they have been witnessing lot of volume growth. The overall revenue growth you don't see is because they have to give reduction in pricing also to be competitive and to get more volumes. So I think it's a problem of 2-3 years of the pain in the business which was there, and they have been handling it, and we can't see that much of top line growth. Uh, but I do expect it to improve going forward.
One more question that I have here is that do we have some kind of... Hello?
Anand, can I just add to Ayush before your next question?
No, because my question is related to what Kiran had said.
Okay, go on.
So my question is that do we have some kind of analysis as to what rupee appreciation can do to this story?
I don't think we try to do those kind of factors while making the investment case. If they come through, that's a bonus. But the investment case cannot be built.
So rupee appreciation, in my opinion, could be a serious concern, because most of the revenues, as we see, are coming from US, and you don't see that as a concern. Rupee appreciation here, you don't see.
So that's a concern for anybody who's an exporter. Okay, and so specific to the business, it's across IT players, across pharma, across MPS, all its competitors. So that's a business challenge that everybody has to mount. So that's not something that we really, it's a macro thing. It's not something that really goes into our factoring of a long-term business case. We are talking of not next year. We are talking of, doubling the turnover in 2 to 3 years. That's point number one. Point number two, I want to add to what Ayush has said perfectly. We need to concentrate, is the volume of work actually increasing or not? And like Rohit said, there are only two real monitorables. He captured that beautifully. That if you want to track this business, well, you need to track not customer additions. You don't need to track the real growth. What you need to track is these 5, 6, 7 key customers who hold the key to this business growing stronger in the next 3 years, because from them they derive 75 to 80% of their revenues, and it's getting deeper by the day as they service more and as they penetrate deeper. So the key thing there what we have been given to understand. Let's wait for the management to reconfirm. As mentioned in the management Q&A, if you remember, the revenues from Elsevier, probably their largest customer, has doubled in last 1 year. This is the time after the pain of 2 years. Now the business is, going ahead at a faster clip. The revenues from Macmillan have grown 40%, and they're pretty confident that that will go to 40 to 60% because now more processes are integrated directly into the back end of Macmillan and Elsevier. So next time around that when we try to monitor this business, actually if it's progressing or not, will be to really find out what has happened with these 5-6 key customers and what is the business level growth for these 5-6 key customers. At the moment, we have a general idea, and we have to believe, like Ayush has said, that business is really growing stronger with these. And if they confirm, we put it deliberately, therefore, in the management Q&A also to get a confirmation back from them that yes, this is what. In fact, it's also mentioned in the annual reports, probably. 100% growth in Elsevier and 40% in Macmillan.
Yeah, it was there in annual report.
Yeah. So if that's there, so those are the key things to monitor here. And if those things happen, and in the rest of the other 4-5 large customers, we need to pin it down there. If that happens, then we have no doubt that business is going to get stronger, and management's confidence of 25% CAGR is going to be delivered. Yes, there is a lot of act of faith at this moment. Things on the surface do not look very promising from the outside, but as we talk to the management, I think and we hear them in the con calls, we read the annual reports, we get the distinct sense that there is companies on record saying we're in a global sweet spot. Now that may take some time, it may not immediately happen in a year, but in 2-3 years' time, they are going to exploit the real position of strength that they are getting into today. So I think at the moment there is underplay from management side in terms of what is actually happening on the ground. We also must recognize, they have mentioned that all the 3 acquisitions are doing very well. So in organic growth, let's forget the older business, but these acquired businesses are also growing very well. He did mention that one of the acquired pieces were very small, but they could get the core vendor status for that customer along with MPS's all other offerings, where they were not MPS had no presence at all. So there are many things which are happening and which could really play out in the next 2 to 3 years. So act of faith, definitely. Things on the surface may look not so good. We need to make a judgment call based on a few key metrics. And I think as we walk with this company, next 6 months, next 1 year, we will know much more on what the real progress is. And even in con call, they're pretty transparent, forward management. So even in con calls, these are the key metrics that we should all be pursuing. Thanks.
Okay, next question.
Hi guys, excellent presentation. One thing, I'm already invested in MPS, but having said that, I have my own views and concerns on that. 2 questions specifically. One is that in the last con call, that the management has mentioned that the largest competitor and peer is around $100 million or $120 odd million size. So, and that kind of a number that they've been maintaining for quite a while now. So my question is that, once they go ahead and, do this acquisition and double their size, what is the leeway for growth from there on? Because then, they will be very near to the largest competitor. And, kind of corollary to that is that, they have been talking about $1 billion kind of a outsourcing industry and growing at 15%. And, they are saying that the whole industry is consolidating and we are on the right side of the consolidation. So that, if you look at their growth numbers, both of these things do not gel in together. So I think my concern is more that, let's say they grow, they double their size after acquisition. But what after that? What is the life after acquisition?
Maybe I can take an attempt at this. Hello.
Yeah, Rohit, go ahead.
Yeah. So, Dhanil, I think I think there are two things here. So one is the market opportunity. If you look at the overall IT outsourcing spend, it's I think a very small penetration right now. So I think I think in my sense that will definitely increase over the next few years. So that I think will the market that we are looking at, maybe $1.5 billion that we are looking at, I think that will definitely increase over time. And the second question then is that will MPS be able to take part in that enlarged pie? I think what they're trying to do is just that, because becoming an indispensable vendor for the big players, because I think publishing is a very top-heavy industry. There are only, I think, top 10 guys contribute a lot to the overall publishing pie. So if you are sort of becoming a core vendor there, I think as and when the purse size increases for these people, MPS will definitely benefit. I think in that sense, I think revenue, the overall pie, I think is big. Even right now, I think $1.5 billion, and even the biggest guy is $100 million, and that and there are many. There is a huge long tail of small service providers, and if it gets consolidated, somebody like an MPS will only get benefit because it has a very good balance sheet. It will be able to acquire people. It will only help MPS in that sense. So I think even the current market size, I think, is big enough for MPS, and I think the overall market will definitely increase. How quickly will it increase? It's anybody's guess, but I think given the way we are content, I think it's only anybody's guess. I think everybody will realize technology is important, and it's a question of either doing it in-house or outsourcing. And if somebody can really provide value to these publishers, I think they would want to outsource it given the economics of outsourcing. So I don't think market size is a challenge. I think growth rate could be a challenge given the way how quickly can they execute on that. I think market size will not be a challenge, I think.
Yeah, I think my question is not on the market side. My question.
Dhanil, I want to add to that. I think your real question was when they get to, you're saying that let's take it as a given that they get to the size of the biggest player.
Yeah.
And then what happens? That's the real question you are saying. Will they get constricted or not? Yeah. So see, the how it plays out here is very different. It's like it depends on what kind of services and what kind of technology market are you servicing for that customer, and therefore how much legroom do you have with your existing solutions to penetrate deeper into that. The bigger guy that is there are two bigger guys, right? Aptara is there, one at 600 crores roughly, and Innodata is at 1000 crores roughly. So we don't know exactly whom he is referring to. Aptara is in some kind of a financial mess after, not Aptara, but their acquirer, iEnergizer, who acquired them at 800 crores and at some 1500 crore kind of debt there. So there is some issues there in terms of continued business growth from Aptera side. Innodata we don't know much about, but the key for MPS to grow is not looking at how the others are growing, looking at what the thing that they mentioned, the gaps in the technology portfolio. So now this K-12 and pre-K-12 market that they have got a good hold now with the acquisitions, that is something that is sort of virgin for them, for those customers, and here there can be a much faster ramp up, which is probably independent of the leading players that you are referring to. So that is one part. The other part is that Macmillan part, where they are there, where the business penetration is not even 5% there. That part nobody else will get into as easily. So there are few areas that I don't see a problem for this management to scale independently of competition. First, as Rohit mentioned, the overall market size is very huge. So people have a lot of room to play depending on which section, which niche they are very good at. And then within their niche, there might be a few competitors, and then how you deal with that. So these are the two components. So one, overall, you don't have a problem. Second, it depends on real growth here. Again and again, management has been mentioning, and this is what we have been always running into, is the parameter is customer acquisition. Acquisition is you cannot make an entry into new customers unless you have a solution piece already you are doing for them, and that is the main reason for acquisition. So again, the next acquisition that they make will be very, very critical in terms of seeing the growth jumps that they can have in the next 3 to 5 years that's going to happen. So given their track record, the success they have made out of the three acquisitions that they have done, the fact that these acquisitions happened with customer blessing. So if they are going to get further work and grow huge volumes, and they go for a big ticket acquisition or couple of, big acquisitions, 50 crores, 100 crores, rather than the 5 to 10 crores acquisitions that they have been doing, I am pretty sure that will only be done with the blessing of the customer, that continued business of a certain size is going to come from them. If they are able to stabilize the operations, reduce costs, and execute if there are delivery problems, etc., things like that, or extend product roadmaps which may have been blocked for some time. So one is that customer blessing is definitely going to be there for an acquisition. And second is that given this management, we know that it's not something that they rest on their laurels. So the new acquisitions also, because of that, they have fought, and this vendor rationalization that is happening, they've got a core vendor strategy in a completely new domain. So I think again, I don't see, in my mind, I am very clear that there is absolutely no problem for growth for MPS, as long as it again does a proper acquisition, doesn't pay up too high, get it at a right valuation, then the next leg of growth will kick in from there. Till that time, we'll have to be happy with a 20 to 25% kind of organic growth. Organic meaning already acquired these three businesses and what was there from Macmillan India before. That should give 20 to 25, 20% plus, in my opinion. My assessment is management is underplaying. And second is that when they do the acquisitions, then next acquisition, the larger volume will come. That's my assessment.
Okay, so that 20 to 25% that you are referring to is the volume growth that you are referring to?
Not volume growth.
Or the
earnings growth. Earnings growth.
Earnings growth. Okay.
Earnings growth.
And
because productivity related improvements are key. Platform integrations are key. Reusability are key.
Mm-hmm. Okay. Because my concern is only coming from 2-3 variables. One is that it's a very sticky business. Second, there are already well-entrenched players which are much larger than MPS. Okay, so they are anyway into a client's system. They are kind of well-entrenched into that. And third, there is a business where you are fighting on price and your quality of work. So all three put together will make it very difficult to take away business from existing players and get it into your fold. So
there is a way to look at this. Instead of looking at generically and saying 5-6 players, we have to look player by player, and that's why we had given the breakup of the margins of each of these players. The only player that they look up to and benchmark is SPS at 50% kind of EBITDA margins. The others like Innodata are at 20% margins. Aptera was also, I think, Innodata was at 11% margins, I think. Aptera was at 20%, and the others were at lower than around that range, right? So it's not that the profitability of any of these are much better. The only player who is ahead in this game is SPS, which they have mentioned, and it was started by ex-Macmillan India head. And they have the biggest advantage that they do 50% of the captive work for one of the biggest after Reed Elsevier, Springer. So they do 50% captive of that. He is the guy who is, done Macmillan India here. He has the relationship and probably better processes, efficiencies, all those things. So he is the player who is ahead in the game. They're benchmarking with him and trying to reach there. And in what MPS has mentioned is, 5 to 6, 7 players, but not all are in the reckoning. What he is effectively saying today and leaving it unsaid is that there in the customer negotiations today that are happening and this core vendor kind of qualifications that are happening, MPS is among the top 2. They're top 2 or 3. They're saying we are being considered as number 2 effectively, even though we are much smaller. They know that we can deliver. We have the financial strength. We have the technology strength. We have the execution track record. And we are a stable company today. And people believe in us. They know that we can do things. And we are being considered for additional business as number 2 out of the, you can say 6, 7. But actually player to benchmark is only 1 there ahead of you. And the others are there. But they have their own niche, they have their own advantages, they also have their disadvantages. So I don't see again that they have to snatch away business from those guys. Innodata and Aptera, for example. They have to just do penetration deeper into Elsevier, deeper into this Macmillan and their Cengage, and all the other customers that they have, and that is definitely within their control. It's a question of negotiating well with the existing managements of how much to give away, how much. It's a volume and margins trade-off, as they have been mentioning.
One thing that Donald, I think I personally don't understand the business too well. So if you guys can take me through 1 or 2 workflows as to, for example, if Macmillan wants to publish a book, or for example, if the other customers, where does in the entire workflow, where all does MPS fit?
So broadly, there are 2 parts. One is the publishing front end, and the other is the pre-publishing part. Okay. The publishing front end is all the large players. They have their own front end platforms, publishing platforms. So that is mainly for access and discoverability of the content. Okay. Pre-publishing is.
Let me just stop. When you say front end, का मतलब है कि जैसे Springer के papers online मुझे अगर देखने हैं तो
उनका पोर्टल मान लो, साइंटिफिक जर्नल्स का पोर्टल मान लो, ठीक है, where the finished product is available. Okay, प्रिंट का तो अलग हो गया, डिजिटल का अलग हो गया, ठीक है. And then the other part is the pre-publishing. Now pre-publishing part also, obviously Macmillan was doing everything themselves before. Then they said, "Nay, let us make low-cost location like India, Macmillan India do all the workflows." So what are the workflows? Workflows are what? Author submits a manuscript.
Okay.
ठीक है. अब manuscript आने के बाद क्या होना है? You have to do proofreading. These are technology things. So you don't require English speaking people. You require domain specialists. So if it's a medical book, you need medical people. There are PhDs also and postgraduates there in the editor team. Okay, who will do the proofreading. They will link to all the. So any scientific and technical paper is very different from a novel or a book. Scientific and technical things link to lot of reference material. Bibliography and reference material is huge. Like you will have to look through databases and connect to the various pieces that the author has mentioned. Okay, so that is another part which is very extensive. If you are not in the domain, you can't do that job efficiently. So the whole job is about turning the manuscript into a finished, pre-published product in the shortest period of time. So first is this, excuse me, proofreading. Then is this making that journal appear in the manner that it's desired, the pagination and the cross-referencing, the bibliography and all that, the linkages, all that is done. After that is the design. After the design is, I think, the pre-final product. And now each of these pieces, like today they are saying that we are totally integrated into Elsevier, means that the actual work is being done now on the pre-publishing platform of MPS in Elsevier for a certain segment of work that MPS is doing for Elsevier.
So let me just...
वो डोमेन का जो भी माल आएगा वो पूरा का पूरा यहाँ पे हो रहा है MPS प्लेटफॉर्म में. MPS ऑपरेटर्स are doing the, based on the document DTD, they are doing the operator job, which is not a very skilled job. It's a more automated job. People can be trained easier, but you have domain specialists to do that editing and proofreading function. And then the finished product into the different format that it needs to be, PDF or whatever format that it needs to be finally output, goes back into the integrated, into the platform. Workflows are integrated that once this is finished, this should raise alerts to this person. Now this person should see, and then once only he has approved, it can move to the next level. All those things are workflows in between the different stages. This is what very roughly I can sort of understand and whatever I have asked people.
So, Donald, if you can just elaborate a little bit of how acutely the publishers recognize the pain. Why MPS's services are required, in this whole workflow. Why is it that more and more outsourcing is going to take place, and how acutely people are aware that they should be outsourcing? Or is it that MPS has to sell their stories saying that we should be doing this and, we can do it at a cheaper rate, etc.?
No. The outsourcing, as Ayush mentioned, that the industry is in a turmoil. And as Rohit mentioned, that there is a fast pace of change for the industry itself. All the publishers are suddenly with the realization that, hey, we can't continue to do things the way we have been doing. Forget costs. The way content is getting consumed, we have to first turn digital. If you have seen the statistics, in 2012, I think out of some 300 billion plus was in print, and only some 83 billion was in digital. And today people are saying that, boss, this is not the way we can continue. We first, have to move away from print and get closer to the way content is getting consumed today. And then there are multiple devices and multiple ways of the same product being consumed, like the Maxter app on the device versus, Kindle versus on the web, and different kinds of additional formats between the different readers. It's a very, very fast changing technology dimension where people who have their in-house teams are definitely not equipped to handle this fast pace of change. Second, they are very high cost. So even if they have to buttress the team, bring in specialists, this is not going to work. So they need a player who is low-cost location. And second, they need the same guy to be technologically very nimble and keeping pace with the developments. So today, a new format comes out, a new way of consuming the content comes out. This guy should be ready to say, yeah, I will show you something in 3 months. That is what they need. And it's absolutely clear that outsourcing, every CFO of a large publisher is very, very clear that outsourcing has to happen for these two reasons. First,
but do you see any signs of it? Because if what you're saying is correct, then the numbers should be dramatically bigger, isn't it? Like from the 1 billion, etc.
Yeah. So it's like this. So why hasn't it like if you see all our newspapers, how long did it take for them to realize that we have to go digital? The scientific and technical world is far behind them. The consumer part of the thing, if you see all the magazines today are available on Maxstar. You want to read Fortune or Economist or whatever, anywhere in the world you can read it. It's all digitized and all. But scientific and technology journals, this STM market, medical market, they are behind the game. Their customer set is today changing. Earlier their customer set, MPS mentioned, that used to be only the university professors and PhD students working under them. Today it's a global customer. Any student base anywhere working in the world is a customer. So things are moving at a slow pace because of legacy reasons, but they know that the writing is on the wall. Okay. Things, even after they decide, things take a lot of time. Like they said, that a $40 million budget, only 4 core vendors. A year has passed, MPS has got only $1 million out of the pie. Just as good as the others. So it sometimes moves at a very slow pace. It depends on the confidence. It depends on the negotiation. I'm sure there must be, hold-ups between both sides. That at a certain level only things can be done, and pace of change. I don't know what are the dynamics. Slowly, as we get familiar with the business, I mean, these are the key questions to ask. That how will you move the cheese yourself? Like if you say that client confidence and client relationships are your 2 main USPs for success, it's a very generic term today for us. But the next time that we question them, it is going to be all right. Today you are at this level of business, 200 crores, and you getting to 500 crores. This is the roadmap, 2-3 years. From 500 crores to 2,000 crores, if it has to happen, how is it going to happen, and how much of it is going to come from these big guys, and in what pace of change? So I think it's a story that is unfolding. It will take time, and as in any other story that we have participated, the next 2-3 years are very crucial. Okay. We have every confidence that they will walk the talk and things will happen. And if they do happen, they'll become stronger. If they become stronger, they're making themselves much more valuable to the customer. The one statement that comes back from MD each time when I mention to him that cost pressures are known, everything is known, nothing is hidden from them. So why do you think you will continue to be as profitable? They know your profitability, and they are bleeding. So he said, actually the one thing that is true for them also is that the kind of work that we are doing for them, the value of that work is hugely valuable to them. I didn't put a fine point on that, but if I were to understand what he meant, he would mean it that if the options, what are the options if they have to walk away from MPS or walk away from those 4 core vendors? The options are much more costlier than trying to negotiate something with them which works both ways. So he has absolutely no doubt in his mind that they will continue to remain profitable despite giving away, doing double the work, double the volume at slightly higher pricing, maybe lower pricing.
Okay, I want to change the tack a bit, and people please either send in a message from in Skype, or just say that you want to ask a question. But the next question I wanted to ask was around the management capability. We've seen, of course, them do an excellent job over the last 3 years in terms of the quality of turning around the business. But can you also elaborate, what gives you the confidence that they can actually do the organic part? Because the organic part, I think people have, it requires more sales ability, so you feel that they have the same level of competence as they've done in turning around the business versus actually growing the business?
This is a new question for me. I haven't thought about. Let me collect my thoughts while maybe Ayush or Rohit or anybody else in the group can step in to throw your thoughts on this.
Sure.
The question is like this, in some companies, there are some managements who are very good at certain things. So they are very good at turning around a business. So bringing, cutting costs or integrating or acquisitions. That is their competence. So this part they've done excellent, so that's a given. But that story is already played out. It's already in the price. It's already in the what we have seen them succeed very well. But the next lap is either big acquisitions or multiple small acquisitions, or it is also to do with actually organic growth. So.
Yeah, I think just one point I'd like to add before Ayush steps in to answer this is that you are asking whether they have the sales capability, the mining the customer deeper relationship capability to grow the business organically. So to that extent, already we have a precedent that when they were in dire straits, they could retain the customers, they could give them the confidence that, look, hey, we'll be stable, we'll not let you down, we will get you timely deliveries, and they have delivered on that, and they have increased the business for their largest customers by 100%. Elsevier 100%, Macmillan 40%, and saying that it's going to happen every year from here, 2-3 years. So that gives a confidence that yes, organic business they will be able to do very well. The relationships are very strong, their capabilities are well known, and the cost of switching for Elsevier for those components that MPS delivers is very high, even to hand it over to a competitor, I guess. So more and more outsourcing work will happen out of existing customers. Now, at what pace is the question, and for that, I think is this negotiation. Continuous learning machine is learning negotiation every time at Harvard. As for new clients, they have already shown some traction there. The US team has got Apple in as a client. And they are doing all these Apple documentation, all those things. They have actually re-engineered the processes where Apple wanted a direct view into each of the workstations to see actual work, what is happening there. So they could do that. There was a special mention of that in the annual report. So I think this is a management which is, which is smart. Or they first identify what has to be done, and then they have that come what may attitude to deliver on that.
Okay.
Time and again we have seen that. So I don't have too much of a apprehension about their ability to sell or maintain relationships or grow the relationships. It is about probably the pace at which the customers are ready or the market is ready in terms of pricing and things like that. But this is a very good question for us to put to management again.
Okay. Ayush, you want to add?
A couple of things what I think is two good things that I see here is that the company is very, very cautious. When they're acquiring a company, they're not firing away the team or doing something totally drastically new. They are trying to retain the same set of people, but given their low cost base, better thought process, newer things which they can do along with it, they're trying to reduce the cost and increase the business. With their relationship with their customers, they are seeking the customer blessings because they want to grow the business that they are acquiring, integrated with their platform. Yeah.
Ayush, if you finished, I can maybe add another point. I don't have enough data points on this, but I think also the background of the guy, I think, as Ayush mentioned, he's a serial entrepreneur. So he is scaled. So I'm sure he knows how to grow, and how to add customers, and how to work on the sales engine. So while I don't know in terms of whether that capability is there or not, but what gives me some sort of confidence is that he has done it in the past in different sort of roles, whether it be in BP your overall income for that. So, I mean, from that perspective, he's a very successful entrepreneur in his previous roles.
Rohit, there is some proof point of that he is actually previous businesses is grown organically like this.
I think maybe Ayush can help you in this, but I think his BPO was, I think he grew that business and he grew it very profitably. I think he mentioned that they have the best profit margins. Although, and while I'm not able to answer your question whether he grew it, I think that business is at a good scale. We can check on that.
Okay.
What I remember, I once at the initial 2 years back or something, once I had done some work. At that time, I had read somewhere that he had exited twice. He had sold two of his companies after scaling them a bit.
Okay.
The
Okay.
past company BPO was not of a big size, but it was small and in a niche with very good profitability, the best in the industry. Other thing
Okay.
that I find very interesting is that he's in no hurry at all. What he says is there are lots of players in this industry who are up for sale. It's not an industry where people are want to grow. There are lots of people who have reached a size, they can't scale up, they have a small niche, and they are not being able to adapt themselves, or those problems are there where they have got stuck, and those are the people who come out to sell.
Yeah.
So
Yeah.
he's not someone who's just going out and I want to do something this, something big acquisition. Rather, he's playing a waiting game sort of thing, what I feel, or maybe get some help from his customers, like he has gotten past. This is something interesting. Have a look and negotiate.
Okay. Gaurav, you have a question. You want to please go on?
Can you hear me?
Yes.
Yeah. Yes. Okay. So one question was that see, when he acquired this company, he already had a big setup in this place, Dehradun, and so one of the low hanging fruits for the first couple of years was to move people from Bombay and Bangalore back to Dehradun. But subsequently, and that has resulted in the huge improvement in margins. So, has he elaborated anywhere whether that has resulted in currently the how the pricing is structured, whether it's on a per person based pricing and that is creating the pricing pressure, or is it on a transaction based pricing? Hello?
It should be a transaction-based pricing rather than a person-based pricing. We haven't asked it, but that's what I think. Matlab, you must be getting projects for a certain amount, and how beautifully or how quickly or how efficiently you can do it, that is what will result in your profitability.
Okay, so my only issue with this is that given that how he's been able to change his profit structures, would it be the case that initially his margins have spiked up, and then the customers come back to him and say that since your cost
Yeah.
structures have gone down quite a bit, pass some of that benefit to us. So.
No, so that is what Donald had highlighted. It's not that he is enjoying a premium pricing to any of the competitors. It's a very competitive industry. So it's not a game there where you're making a fool of your customer. Rather, customer feels that he's already getting a very good deal. They negotiate every year, they negotiate very hard, and yet the company is able to maintain this profitability because of their processes efficiency that they are able to derive.
So, is this a given that these heightened what we call these heightened margins? This is something that he's aiming to maintain, or this is on the.
I think the answer comes. I used to fear on this point, but when I looked at the data of SPI Newgen, there are two companies with clear 40-50% EBITDA since quite some time. Then I think the biggest player is SPI, which is a 1,000 crore company, which also has a BPO operation and has a combined margin of 20%. Somewhere I feel they must be having higher margins in their content delivery, the work that MPS is doing. So I think also the answer of Nishit, that even in BPO he used to enjoy high margins in a very competitive industry. It's how you structure your operations, build your company. Uh, there are certain parameters that you have to follow. He has a rule that the employee cost has to be around 40-45% of the business.
Okay. Yeah, so I can buy into that argument. There's another company that has successfully done that, which is eClerks, which moved from a person-based pricing to a transaction-based pricing, and that was one of the reasons that their margins were almost double of what they were in the other places. And I assume that the fact that it's being done through a platform, through a certain workflow, then there is a certain element of proprietary knowledge, domain knowledge also built into that. But you are saying, Ayush, then you are comfortable that these kind of margins can be maintained. These are not like just because the costs were cut and they spiked out and now they will go down.
I think Anant had raised a question that in case the dollar appreciates, something like rupee appreciates. Yeah, I think in a short term the margins can get hit for a period, but I think the margins here are due to the processes, management quality, and the business the way they are structured. I think Donald also highlighted a point where there would be reusability of the internal processes for different clients. I think the more work you do, the more efficient you might be becoming with a period of time. I think Donald or Rohit may add more.
Yeah. Okay. So now another question is that we are talking about that the existing incumbent players in the publishing industries are shrinking and facing huge cost pressures. So it's a kind of a shrinking market which is creating this pressure on outsourcing. But there is also this whole new set of market that is emerging where you have news dispensing or publishing houses that are exclusively present just digitally on the net and don't have any physical presence. The like say a Huffington Post or a Business Insider, or in India it's First Post. So is that market something that can be targeted, or is there any thought on that on their part?
So it's a 80-20 rule, Gaurav. They in this 80% of the market, which is their 5 to 7 big customers, they have a huge. They're not even doing 5% of that business. Why should they run after servicing a Huffington Post or any other which any commodity player can service? We need to appreciate this part, that this is different from IT services. This is different from most other technology service businesses in the sense that it's a very protected market. There are only 5-6 guys players in a very sticky customer situation where they are very difficult to be thrown away. The survival of the customer depends practically today on these guys taking them forward in an efficient, timely, cost-effective manner. There is no reason for them to concentrate other than these big customers. So there is these optionalities don't even need to consider. What we should look at is 5-6 big customers. Like Rohit mentioned, I like Rohit's those 2 points. What are the key monitorables when you think about this business? What is the growth rate of these 5, 6, 7 key customers that they're in the business that they're getting from that? And as mentioned on the cost side, wage bill, as they scale to meet these things, is the wage bill remaining within the 40 to 45% range that the management wants? If these 2 things are in sync, then there is no need to look anywhere else. I mean, multiple optionalities exist, and therefore you see they have 100 other clients, which Abhik had mentioned, who do a business with whom they do a business of only a few lakhs, maximum going up to 1 crore. And when we asked them this question, they said, yeah, those businesses are there, and they are content transformation kind of businesses. Again, they are mostly on autopilot. We have processes built for them. Customer can buy the whole technology solution from us actually and implement them. And we get, this is a business that will continue to run, and these are businesses that we need to be in, because content transformation is something that is happening all around us. We must have our own solution pieces rather than to run around to some other technology provider to get that piece of the solution. So they will be in these small things which have enormous potential if you want to see. I mean, if they've got Apple as a customer, they can get Amazon as a customer for self-publishing and all those things. They can all happen. But again, end of the day, 80% of the business will still come from the 5-6 core customers. And that is what we have to track.
See, Donald, my question was more driven by the fact that when we talk about the long runway, if we talk about the fact that this publishing industry and the incumbents in that industry are facing a shrinking market, then how do we think about a company that is a service provider to them, have a long runaway ahead of him where they can grow at 20-25% for many, many years to come?
Have you finished? Or?
Yeah.
So to answer that question, it's very clear. You need to not talk about the entire publishing industry. You need to talk about the STM market, the science, technology and medical journals market, which is again, I think 40 to 60% of their business today. Okay. And this is where the Reed Elsevers of the world are there. Reed Elsevier was hugely profitable. They doubled their business last year. I think they topped $5 billion. Most of these existing businesses are at if you look at the top 50 publishers, they are at 5 billion, 6 billion, 7 billion, $10 billion. There are some Chinese publishers who are coming in at 3-4 billion. Top 10, top 15, 20 are in this range. All of them, they are not in a shrinking business situation. They are in a business situation where their business is not growing much. Annual growth rates are 3 to 4% for them. And that is because they're still stuck to I guess, I'm not very sure of this, but I guess that is mainly because they're still stuck to the print domain. As they are shifting more and more services to the digital domain, their businesses are increasing. The rate of growth in those businesses are increasing. So the customer set that MPS supplies to are businesses that are huge businesses actually, and even if they don't grow at 10-15% themselves, they're growing. Some of them are growing very nicely like Elsevier. Some of them may not be growing that nicely. Average, let's take the market average, only 3-4% of growth. But that 3-4% of growth of a business where you are just servicing 5 to 7% at your peak today, you have a huge leg room where others cannot get in. That's the beauty of this thing, is that who else will get in there? Nobody. If you do your job well, you are able to sacrifice some volumes, but because of your productivity and efficiency improvements, you trade that off every year with that guy and continue to get business for, I don't see a problem for the next 5 years. And definitely the STM market is not going out of existence in 5 years. What is debatable is the future of probably not the technical market.
Hello?
Yeah, could you hear that?
Yeah,
no, we
after
didn't
the
hear the
technical
last.
market, something went wrong.
What I was saying was that basically the science, technology, and medical journal market is under no stress in terms of closing down or suddenly getting disrupted. That is very much in their control. It is up to those guys, and nobody else can get into those publishers' domain also today. No new publisher can get into the technology domain of a medical journal publisher, for example. So that in that way it's protected. It is their pace of transition, because they know they cannot survive for the next 10 years. They cannot survive if they continue to be where they are, if they continue to be in their wells. So I don't see that kind of a threat at all, because they're servicing very, very small pie of the existing business of a customer. Very few players can get in there. It's the only thing that can go wrong is themselves. Again and again, Nishit kept saying that is we can go wrong, we can trip up, like we don't deliver on time, we are too ambitious, we take on too much, we acquire something at a very high price. Only we can go wrong. Most of the other external variables are predictable, sustainable, and under control. That is what I like best about this business.
Okay, let's move to the next question. I think Anant has a question. Anant?
Hello?
Yeah, Anant, go on.
So the reason that the business is sticky is because the publisher actually integrates deeply with MPS or with any of its other competitors, right?
Yeah,
Hello, is that right?
yeah.
And is it because, okay, so there are two questions here. A is that there are margins or there is a better, there is a cheaper product that is available because of outsourcing. That is one case I can see. And B, that because of the integration of processes with a vendor like MPS. So, I mean, are both of these factors, or is it like A over B or something like that? I mean, what I wanted to make sure is it is just not outsourcing which is driving this.
So, do you understand the question, or can you repurpose the question a bit? What's driving the outsourcing? Is it the stickiness of the customers, or is it also because they're integrating with the technology? What is?
Yes, so is the stickiness because of the integration with the technology?
Okay.
I think it's a combination of both. It's not that the platforms are such that they are limited, the integration is limited to just one player or two player, but yeah, that plays a role. So today, suppose the people at Macmillan, they would be comfortable the way the MPS has a platform, the way the MPS team does a work and integrates it with their platform. So this integration is definitely very critical. Once a company, so uh, every publisher will have their own platforms and there's a way of doing work on them. Once that integration is done, so there's always a comfort of continuing with that vendor. It's not that this integration is limited to just MPS, but it would be there to few of the players.
Okay.
At the same time, it's a ongoing thing which you won't like to change just because of a very small cost difference. But yeah, if there is a big cost difference, that can get changed, I think.
So, Ayush, I had one question which was related to
Sandeep,
what Anand. Okay, go on, Anand. Please go on.
So, okay, so what you're saying
maybe-
is that almost all these players, and okay, so the other question is that all the competitors that you have listed out are Indian players.
Yeah.
Okay. Sandeep, you can go ahead with your question.
No, sir, but the question was just related to what Anand asked about the technology. That is there really, because also in one of the slides it references that there is optionality because of the technology. That the platform could be used going forward. And what I wanted to understand is that is the technology really a differentiator, or is it just that you just need the technology end to end to be a player on the table? So doesn't every competitor also have the technology, the workflow and so forth? If you want to be a serious player, you need to have all the pieces. So if you don't have it, you will be sort of negatively impacted. If you have it, you are not necessarily positively, that you're positively differentiated. Is that how you see it as well, or is it different?
I think Sandeep, you have put it in the best possible manner.
Yeah, I have a take on this, and maybe Ayush can answer that subsequently. The first part to think about is that pre-publishing part, which is the real bread and butter today. The pre-publishing part, you are absolutely right that, and we have asked this question in the management Q&A, it has been answered also, that everybody is investing in these technology pieces. Nobody can survive with big gaps, etc. And everybody are building their own platforms at the same time. And they have their advantages and disadvantages. That is point one, which is taken that, it depends on, you have a minor advantage or a minor disadvantage, which depending on your drive and your focus and your execution ability, you'll be able to match up or move slightly ahead, remain slightly ahead. But that's not going to be a big change in your differentiation with the others. It's the relationship with the customer, that's it, and your ability to deliver, which more or less everybody has, these 5-6 guys. The profitability may be entirely different in each of these cases for different reasons. The second part is what is the interesting part, which Rohit has put out, is the front end and the back end. So this pre-publishing part is the back end. Front end part, I have the hunch, I don't know, and I have not investigated enough. I have the hunch that they are one of the very few among these 5-6 players to be investing in building a complete front end also. And which means that tomorrow, this building this front end is not going to service this their bread and butter 80% customers, because all of these big guys have their own platforms, which again we have covered in the management Q&A. They have their front end platforms and they're very good, or they have outsourced already to a good player. So this front end development is being targeted at smaller publishers. And the first one where they are having a good success is nature.com, where they're doing both the front end and the back end. And nature.com tried to evaluate many off-the-shelf products and platform solutions that were available, and they were not happy with what was available on the market, and that is why they have got this work now, which is more of a project work with them, build grounds up based on natures.com primary requirements and MPS's own inputs into that, where the front end and the back end are both being done. So where the pre-publishing will be done on existing pieces like MPS Track, MPS DigiCore, MPS Insight and all those things, and the front end part is being built where both will get seamlessly integrated. I don't know the time frame of this, maybe a couple of years down the line they will have this out on the line, and that's a time when they will be able to offer this offering for other smaller publishers. Now, how much of this? Yeah.
Just one question here. Again, like I understand the front end part is very good, but then again, like aren't we saying two different things? That we are looking the company to go deeper with the core clients.
No, this is an optionality.
It's just an optionality. Okay, great. Go ahead.
Sandeep's question was about the optionality, right? So this is just an optionality that exists and it is exciting, but we are not factoring this into the investment case at all right now. It is just something that is there, which can be significant, and who knows? Because if you read this domain, Publishers Weekly is a good site, for example. If you go and read this domain and try to see what are the changes happening there and one thing comes out very clearly, and I think it has been mentioned in the annual report also, almost verbatim from the Publisher Weekly reports, is that tomorrow the content technology vendors are going to rival. Tomorrow is not in 5 years, it is not even maybe 10 years, 10, 15, 20 years. Tomorrow down the line, these content technology vendors are going to rival the publishers, because they will have everything on the table. They have the domain expertise, they have the tools, they have the processes, they have platforms. They have publications which are running on their platforms. They have the domain skills, and why can't they attract the business directly from the author and themselves become another publisher of technical nature, because they have everything themselves and they can offer at a far lower cost, probably better technology, probably better suited to all kinds of content transformation and all that thing that comes with it. And so it's something interesting. That's the future probably that's happening. They had no hesitation in saying that yes, this is also in the management Q&A, if I remember correctly. At least we have asked this question, I remember correctly, and he said yes, this is definitely the direction of the overall market for content and technology players. In somewhere down the line, this might or might not happen. There are many ifs and buts. There are many miles to go for that eventuality to come around. But even if they get 10% additional business from this front end thing in 3 to 5 years time, I think it's a good optionality to have.
Okay. I think we'll just to try and stick to the timeline. We'll have one more question from Dwanil, unless somebody says that I have a burning question that needs to be answered, in which case just Skype over here. But let's take the answer from a question from Dwanil, and then we'll try to sort of wrap up so that we can stick to the timelines. Yeah. Donil, go ahead.
Yeah, I think listening to this whole session, one thing which kind of I'm slightly confused, and if you can throw more light on, we are saying that it's a business which is very sticky, which has a very limited competition. The customer sees a great value in the work that is being done by the company, but the company is facing pricing pressure all the while and is continuing to do so. So how do you look at this disconnect in the business character vis-a-vis the traits of this business? Do you
So,
get my question?
yeah, I got it perfectly. Ayush, please add after my view on this is put forward. So, what you are saying is that there is a conflict in the two things, and which is right. But our view on that is that they are under extreme technology pressure, pricing pressure themselves, MPS. The customer has no option but to, the fact that is going for outsourcing, one of the main drivers, if not the primary driver, is driving down costs. So this is characteristics of the business which is going to be there. At the same time, you cannot wish away that there are, what are the options? The options are only these few. So a balance has to be struck. It's not that the publisher can go away and say that, no, I will tender, raise a open tender for this and let's see what happens. Okay, that is not that kind of a situation. So they have to negotiate, they have to sit around the table. The good thing is that they have years and years of relationship built into that. The heart and soul of the product itself, is dependent, product of an Elsevier is dependent on the vendor. So it's a good relationship. It's a healthy relationship. The pressures are known on both sides. So we think that it's a balancing factor actually against extreme price pressure that could have been bought in by the publishers. The fact that very few people can service them, and then you go a long way. The cost of switching to somebody else in the field is very high. Acts as a balance, and it's a today a win-win situation. That's why it's continuing healthily. That's why we see, don't forget, 100% kind of growth rates from for MPS from Elsevier. The question really probably in your mind is that how long can this continue? And this happy situation, give 100% and give 200%, take on 200% work, at half the price, let's say. That's your real question. So to that extent, I tried to probe him, and he said that, look, this is not a commodity business, and even in a commodity business like a BPO, you can it's the operating business style and your focus on how you run that business. You know what are the controllables and what are not, and you invest in that right from day one. So we are continually investing in product and process efficiencies. We are getting better by the day. We need to see many things playing out. We need to see them walking the talk. I hope it is not all bravado. It was not, nowhere did we find any false, statement from them. Nowhere did we see any, attempt at glossing over an issue. They always answered an issue upfront, and they had their own logic about answering that, which we don't find insignificant. We find there is merit in that, and it may work also what they are saying. These are some things that as we go deeper into the domain and sit with some of these domain players from the publishing technology vendor industries, I think we'll can get a very good handle on this in a couple of months down the line.
Okay, Donald, there is one last question coming from Kiran about if you can comment a little bit about the price and the valuations, and how much are we buying optionality versus an existing sort of growing business, and then we'll wrap up the session.
Yeah, I think this is the question for Rohit. I think Rohit worked out some stable PE projection for this business, and what should be the right, what is the trailing PE today, and what should be probably a good price to pay for this business?
Sure, I'll take a look. And I think it's a question that I've also been, I think that's the only question that I have in my mind as well. And I've been thinking about it for the last 2 days. So I think I think I didn't do enough work in the sense that I had a very rigorous approach of having a stable range. But I think, I mean, given what I feel right now is that even the quality of this business and the kind of runway it has, I think it should ideally get at a PE of 20 to 25 is what I think. I mean, a similar business that I think I can think of, not exactly comparable, but is an Axelia Kale, which is also in a very sticky sort of a business relationship. A similar business, they get 20 times trailing. So I think it's not, I won't say that it's a no-brainer in the sense that there is a huge disparity between what we think and what the market is giving. But I think given the management is extremely focused and they've executed very well, one can perhaps maybe be a bit generous on the, I won't say generous, but maybe quite at a fair value. That's what I feel.
Where do you categorize this business, Rohit? In our B plus, A plus, A plus category, and talk about the predictability, the runway, the predictability, the sustainability, consistency.
Correct. So I think I would say it's a business which is at somewhere between an A plus, because if the management does what it's saying it will do, I think it will definitely be an A plus, because it's in a business where they will be extremely valuable to their customers, and to a large extent what we've been discussing about pricing pressures and everything, I think it will balance out if things go out the way the management is asking. So the management is saying that we will execute it that way. So I think in that sense, given it's not that they have to do something completely different from what they're doing, it's just that they have to consistently execute and make the customers increase their wallet share. And if they do well, I don't think the customers will have any problem with that, because it's a mutually beneficial relationship. So I think
you're saying
predictability and sustainability point of view, I think it's a fairly, I won't belittle it, but I would say it's not a very difficult task to do. But the only personally, I think a mental barrier is that 20 times, 22 times earnings is a bit high. That's the only thing. But I think
But you think it's a sustainable business?
I think
hugely sustainable business?
I think so. It's a fairly sustainable business.
And predictability of the business should not be very, it's not a lumpy business.
No, I don't think so. Maybe in the sense that execution-wise, it may take time for the growth rates to come. But I think if one is, let's say, one has a view of 3, 4, 5 years, I think it's over that horizon, you will definitely see growth coming up. Maybe it is back-ended, or it's not front-ended in that sense that growth is going to come in the next 6 months. But maybe over the next 2 years or 3 years, definitely I think the growth should come. If the thesis, what we've understood from the management and what we've read, if the thesis is right, then the growth should definitely come in the next 2, 3 years.
We have to keep a lot of faith in the management.
Yeah. I think that's the premium, I would say, in my mind at least.
Yeah, I think for all of us, that's.
Okay, great. So I think I would have to say that let's kind of wrap this up. Thanks to Rohit, Ayush and Donald for the great effort being put in for preparing the notes. And my suggestion on that part was that please let's have it a little bit early the management quality and the business template early so that people have a little bit more time to read it and to think about it. But this is the first time that we are doing it, and I think we did a fantastic job. Even though in the beginning it was a little bit of a challenge to get everybody on board. But the main point is that that we learn from each other, the effort we put in to read and to grasp the business and its nuances. People proposing something and the questions being asked also teaches us, that how to think about these particular businesses. It's not a straightforward thing that everything is all in a line and let's go and invest. It's not like that, because there are a lot of for example, the business is not growing organically so fast just now, or the behavior of the print of the in the industry, how that will change and how long it will take. All these are kind of variables. At the same time, I think these guys did a fantastic job in highlighting the quality of the business, quality of the management, and then we need to think about how to work on putting it all together for ourselves. But the main thesis, or let's say the main thrust of this evening, was to really get this kind of process going, so that we put in efforts to prepare, put in efforts to also read, and then to learn from each other. And I think that's fantastic success. So thanks a lot for everyone, and thanks especially to Rohit, Ayush, and Donald.
I want to thank Anil Kumar, because he is the one who started sending in a flurry of questions, but I don't think he asked any questions. Is he still there, or he dropped out?
No, I'm there, but since everyone is asking questions, I thought I want to hear other views rather than just presenting my view.
But if you still have one last remaining question,
I think if one last thing is there, I would want you to answer this question, which Kiran asked. See, what I'm saying is, what is factor in the price? Assuming that MPS will pay only one-time sales, I'm just reading the question which I have sent. Only one-time sales to acquire the total addition to the revenue next year would be around 150 crores. Okay. Now you are saying organic growth can be 25%. I think which is very, very optimistic. I'm sticking to 15% organic growth. Assuming organic growth is 15%, MPS sales over next 3 years will grow to overall 500 crores. Okay, now assuming that the EBITDA margin will remain flat at 37 to 40%, and on the new acquisitions, margins will be 15%, their EBITDA will come close to 150 crores. Okay, now also assuming that they can absorb the salary inflation of 7 to 10% over next 3 years, and there is no INR appreciation, then their EBITDA will double. Okay, and assuming that multiple still stays at 20, we get 25% CAGR. So where is the margin of safety in all these things? If anything goes wrong, we may end up getting 10 to 15% CAGR.
Yeah, so I agree with all of your observations, but it's a scenario building case, and in investments of this nature, where we are looking at MPS as a very sustainable long-term investment, we are not just talking of these 2-3 years. If in these 2-3 years, even if it doesn't grow at 25% CAGR, the business, we are okay with a 20% CAGR growth in the business. Although we have all the confidence that it will deliver on that pretty easily, especially because that cash pile for acquisitions is there. Management has always mentioned that he'll bridge the gap. Even in the last year, if nothing comes to fruition, he can bridge the gap with an acquisition to meet that target which has been set. But this is a business, let's look 5 years ahead, let's look 10 years ahead. Who is going to dislodge this business, and why is this business going to go down? This business is only going to go from strength to strength, and that is the hypothesis. Today I am willing to pay up for this business. I am not saying, or none of us are saying, I think, or comfortable saying that this is a business available at the multiples that we used to get in 2009-10 of similar kind of qualities, 9, 10, 11, 12 probably. Today in this market you are going to get good businesses, good to great businesses like MPS at a fair valuation. Yes, it is available at a fair valuation. and you may not see too much of an upside here in 2 to 3 years. It's a fair observation. It's perfectly right. But that's not the investment horizon for a business like this at this valuation.
Understood. Got it.
Sandeep, thanks a lot. I think you moderated very well, and I think you are going to be the official moderator unless you are not available or indisposed. Thanks a lot for driving this, because you are the main motivator for to bring this to fruition today. I would like to thank all the participants for enthusiastically backing this effort from our side. We hope that this only spurs us on to greater learning. We also hope that this effort now can be shared with the larger public, especially the VP investment community, for them also to get inspired, and more people like you want to join efforts like this and do exemplary work at ValuePickr. Thanks a lot, all of you, and good night.
Thank you.
Thanks everyone.